Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, April 25th, the year 2019. Let's talk trading. Horizontal lines, Holo, highest open, lowest open. This week has presented some really good opportunities on Holo, especially on the yen pairs. I guess there's something called the Golden Week, and it's making them a little volatile, it seems. And so, in light of volatility and just in trading, you have to have your money and risk management in place. I spend a minute or so on this each and every video. It's because it's that important. It really is. For the week, you can see here, we're only 11 pips off the weekly low, which would be the daily low. And we've got one gap that still hasn't filled. People are asking about the gap trades, and they're saying, hey, those spreads are crazy. What do you do? And well, the thing is, it's one of those questions, it depends. Sometimes I will take a trade when the gap could be 10 pips or more. Why? It's because I believe that price is going to go in a direction I choose, and I want to get in now because by the time the gap closed, they may have already moved the price that amount, closing that spread the whole time. So yeah, the spreads can be huge. Other times I'll look at it and I'll say, you know what, I'm going to wait this one out, and I might have to wait 1, 2, 3, 4, 5 hours for those spreads to normalize. So you can see right here, anything that has a spread 2 or more is highlighted because I don't like to pay more than 2 pips on spread. Sometimes, on a pair like the new beast here, you're just going to have these big spreads. So if you want to take the trade, that's just part of it. Other times, I'll look at it and go, you know what, this ain't worth trading. Now, it really depends on where price is in the overall scheme of things. So, for example, if there was a big spread, say down here, and it's cutting across a bunch of those wicks, and I believe price is going to go, yeah, I might pay the 5 or 10 pip spread to get in that trade at this level because I believe it's going to go this way. And like I said, sometimes, like maybe if it's in a spot like here where it's like, well, there's really nothing here that shows it's going to go one way or the other, pass. I don't need that trade. I can wait. So it's partially you just be selective. So you can either jump in, wait, or pass. I mean, those are your options. Okay, and here looking at the daily candles here, you see we've got a nice 102 pip range here on the yen. We're 13 pips off the bottom here. You can either use this indicator. This tells you where price is in relation to this line, the bottom, the low, and you can see 46 pip breakout here on that lower wick zone on the daily. Just a really nice move. You can see here we had about 17 pips or so on the breakout of the wick zone here to the upside. So yeah, we talked about wick zones last week. So there you have it. But on to the Holo zone. I mean, here's a classic Holo trade right here. Now, what happened? We're on the M5 chart. Okay, we're using the H1. So this was the lowest H1 right here. So what happened? Price opened here, it went up, and so maybe, because this was the previous low right here, maybe you jumped in, maybe you didn't. And once again, on these types of trades, see, that was only about 3 pips. That's why you have to move, get ready to scratch that trade or move that break even or move that stop to break even +1, because then it came down, made another low. But what do we have here? we have a turn trade. What do we have here? We have a rat reversal. And since we're coming off the bottom, we're within 20 pips. We've got a rat zone. And I'll show you that in a minute. And then right here, you can take that long, moved up. You can see here, if you took that break even plus one, you might have gotten stopped out. Or maybe you said, you know what? It's already moved up once. It's right there again, right about the same level. Pushed back down. It came back down, and then it moved up. So sometimes you move that stop up, and sometimes you don't. Now, what was the difference here? What was the difference? Let's go look here at the H1. Okay, so you see here it came down, came back in. Basically, it's coming out of that wick zone right here. So a lot of times, you know how price moves, right? Kind of moves in a squiggle, right? So you see here, it came, and then now it's just moving through. A lot of times it has to test the area, it'll come back, and then it'll go. And a lot of people like to trade what they call the pullbacks. I'm not a pullback trader, but a lot of people are. I'm more of a zone trader right here, or you could say pattern trader, all based on statistics. So you see here, this is what happened. Okay. And you can see here on the tick level what's going on. And see, that was the monthly H1 lowest open. So that's the lowest hourly candle open this month right here. So that was, even though it's also the daily, but you can see here when you know this, it's like this is the lowest one of the month. Maybe I'll take that chance and I'll enter the trade. And this is just the ATR zone. Nice weekly range, 186. And you know, when you stack on these different methods, so you can see here the daily ATR range was also in the weekly, and you saw what happened. Price came in, now price is leaving. But we might talk about that later. Lowest open here, you know, for beginners, usually you don't take this trade because you don't want to get in when it's already made a breakout. But the thing is, it broke out and then it came back. So what do I mean by that? Let's just be clear. You see, it broke out. So here was that low from the previous hour right here. It broke out, but then it came out of that wick zone and then it crossed above that level. So if you waited till here to take it, which that's what the Holo says, that almost gives you the confidence to stay in that trade. And then maybe you have the position size accordingly. So maybe if you put your stop down here at 124.19, now as it's moved up here, now you can move that stop up to, let's see, it's about almost 9 pips. You might move it up to break even plus 5. You may have taken 5 pips off right around here. See, you got that candle here. You might have taken 5, half your position size off at the 5 pip level and see if you get the runner or not, because you really don't want your whole trade to come back and maybe hit break even plus 1, because I've seen that happen before. I mean, it could go up 20 pips and come back and hit break even plus 1. That's just the way trading is. So now, you guys, if you've been following the videos this month, you recognize these as the rat zone. You see here we're on H1. So we've got a green candle, the H1, open. This is the lowest H1 open right here. Taking that in the rat zone. So you've got the Holo trigger right here, Holo zones down here, rat zones here. And usually the Holo zone is going to be in the rat zone. That's one reason why it's such a strong trade. So you can almost think of the Holo as a trigger using the rat, but it's a whole separate. You don't need to use the rat to do Holo, and you don't need Holo to do the rat. They're separate, but you can stack them, and you can see, because usually the Holo zone will occur in the rat zone. Sometimes the Holo zone could actually be bigger than the rat zone. So I mean, if you had a 21 pip or more tail on this candle, you'd see that the Holo zone was actually extended outside the rat zone. And I hope everybody sees that. Now, I'm trying to think, was there any other Holo questions? I don't believe anybody. Oh, yeah. Somebody was asking about Holo on the daily chart. Holo is an intraday trade, not a daily or weekly. Now, you can, of course, you can expand it. You could use the highest daily open if you're trading a weekly chart or monthly chart or something. But if you're looking at that, sure, you can do that. But that's not what Holo was designed for, but it can be applied to it. In fact, so right here, if you switch over to a daily chart and you say, okay, here's the highest D1 open right here. So if you want to trade Holo on a daily chart, you'd want to use this indicator here, edit, and what you might want to do is daily, highest open, weekly, monthly, yearly. And right here, what you might want to do, well, no, you can leave it. I won't say that. Let's just go the way it is. So right here, you've got your daily highest open. Right here, see D1 highest open. But see, you had the monthly highest open. The H1 was a little bit higher, and that makes sense. So, but we're going to look at the daily, and you see here on the day chart, it came above, came below, came above, came below. So once again, right here, using the highest D1 open, yes, you can trade Holo that way. Now, look at the situation we have here. We now have the lowest open. So if price wants to go above the 124.65, that's what you trade. But if price closes below, you'll get a new D1 lowest open if tomorrow opens below this level. So yeah, you can use Holo on the daily chart, but you're not going to be looking at the H1s. You'll be looking at the D1s and possibly the W1s. Okay, but once again, this was designed for intraday trading using the H1. But you can also use the M15. I've seen people do that successfully. You can even put M1. You could stack them and see, okay, look at where these lowest opens are, and is that creating an area that price isn't closing above? That's what you're looking for. Let me just run back through the charts here. You see now we've got a new open. There's the lowest open right there. Once again, we've got a new open here, top of the hour. So that's about it. Now, somebody was asking me about the Einstein line. Answer that question quickly. You can think of this as just as a buy zone. It's the exact same thing. It's just, this is when I open the chart right here. So everything is relative to this level as opposed to wherever the daily open is, which is up here. So compared to me, price is going which way? Up. So these triggers are about, I think 2 pips or spread and a half separate. So, fellow traders, just remember when you're out there, it's not what you trade, it's how you trade it. Let's go drain the banks.